Welcome to the Collateral Base, where we discuss security interest so that you can bank on it. And today we have an interesting question, but first I want to start with a quote from Wilbur Ross. Banking, I would argue, is the most heavily regulated industry in the world. Regulations don't solve anything. Supervision solves things. It was from Wilbur Ross, and gosh knows that he knows something about regulations. I believe he's in charge of them right now. Today, let's imagine a hypothetical borrower, and that borrower is seeking a commercial loan, and he is trying to put up collateral, as much collateral as he can. One of the assets that this putative commercial borrower has is a membership interest in a limited liability company, LLC, of course. He says that I have X% of Y LLC. Y LLC is just a commercial real estate operation. It's a strip mall. How do we value, for the purposes of securing that loan to this commercial borrower, his membership interest in the LLC? Of course, as you know, LLCs don't have shareholders, they have members, and those members then have a membership interest in that LLC that bases itself on how much they own. We have an asset. That asset is commercial real estate. That commercial real estate is just not the res, and by res, that just means the property itself, the building, the parking lot, and all of that. It's also the contracts that the LLC has that gives rise to the rents. So we have a moving business that we now need to value for the purposes of determining the collateral base. First, let's do some easier math. The easier math on that is the LLC interest. What percentage does this prospective borrower own? Well, it's pretty easy. You take the percentage, plug it in. Now we have to go back to the harder question of what the value of that membership interest is, and we look to the LLC to determine that. Now, it's commercial real estate, so what are we going to be using? We're going to be using the capitalization rate. We aren't just going to look at the rents, we aren't just going to look at the value of the real estate, we're going to look at them together to determine its cap rate and what it is actually worth as an LLC, at least in the aggregate. And then we have the easy math where we just cleave off whatever percentage is his, right? Well, let's talk more about how we arrive at the capitalization rate. Capitalization rate is the ratio of the net operating income to the property's value. Let's say that this strip mall is worth $1 million, and its net operating income, its rents less all its expenses, is $100,000. So we have a ratio of a cap rate of 10%, which isn't unheard of in the market. It depends on how hot your real estate market is, but 10%, you'll hear that. Let's say we have the cap rate, we have the percentage interest that the prospective borrower owns. Do we now have a value for the collateral? Nope. We still don't. Why? Because LLCs are separate entities from their owners, from their members. Just because the LLC has a particular cap rate that we can use to value its particular piece of real estate that it uses to operate the strip mall does not mean that the collateral base for the member that wants to pledge its percentage in the LLC is the same. That's not how you look at it. Why? Because it is its own legal entity. And not only that, LLCs often have lots of restrictions, not just in the operating agreement that says how the LLC is going to operate, but in many states' laws for those LLCs have a lot of restrictions against one member transferring or pledging its membership interest as collateral. So you can't simply take an assignment of the membership interest. Usually, there's only one thing that you can really get at as a creditor. And it's not the membership interest, it's the distributional interest. And the distributional interest of an LLC is worth less than the entire amount of the assets comprising the LLC. The distributional interest is just what flows through to the members as a distribution of profits at the end of the year. And there's a particular tax form that many of you have already heard of that you can use to value the collateral base of this proposed transaction is. And this is the tip that you can use, a document that you can look at to determine how to value the collateral when one of your commercial borrowers says that I own so many percent of Y LLC and I'll pledge my membership interest as collateral. You can ask for, well, if this is your first time joining us on the Collateral Base and you're enjoying the content, we hope that you click subscribe and smash us a thumbs up. Ask any questions that you have regarding your secured transaction. Well, not necessarily in the comments. You can go to collateralbase.com and click on the contact button. What document do you ask for from this prospective borrower? You ask for the K-1s from the LLC whose membership interest he wants to pledge. And that K-1 will give you the distribution for that particular tax year. And to more fairly characterize it, you probably want a trailing amount of K-1s, your last 3 years, your last 5 years, depending on how old the LLC is. And that's going to give you the distributional interest, and you're going to be able to see what cash per year that asset is actually worth, and then be able to more fairly collateralize it. Thank you very much, and I will see you soon.